Well, President Trump slamming Walmart over the weekend for blaming tariffs for its decision to raise prices, suggesting that the retail giant should, quote, eat the higher costs without passing them on to consumers. All this as we get ready for more key retail reports this week. Home Depot, Lowe's, Target, TJX, and more on deck. So should investors brace for a bigger retail showdown over tariffs? Let's ask Jan Rogers Kniffen, CEO of Rogers Kniffen Worldwide. Jan, always good to see you.
Always good to see you.
Well, Walmart may be able to eat more of the tariffs than they already have, but can others? Will we feel the pressure of Washington when it comes to, these conference calls and the commentary around raising prices?
Well, yeah, we will feel the pressure. Nobody actually wants to be on the wrong side of the administration if they don't have to be. But we are going to see people raise prices as tariffs come through. The good news is the tariff numbers have been coming down, right? If we're at 30% on China and 10% in the rest of the world, that's not great, but it's not like 145% in China, is it? So if you look at the numbers, you would say, boy, let's say it averages 15%. Maybe you have to pass through 6% price increase to be 100% even if there are no offsets. But, how much pressure can you put on the vendor? Depending on where they are, you can put some on. You can put pressure on the supply chain too now because it's getting cheaper to bring product in, not more expensive like it was during COVID. And then you can also put pressure on the inside of your own business, as they will all do. And after that, you see what's left, and then you just raise your price across your goods enough to cover the difference, and you wait and see how the consumer reacts. If the consumer says fine and you don't have a big reduction in what you can sell and therefore it all works, you're good. If they say, I'm sorry, I'm not paying this, you do what you always do. You mark it down that much and your gross margin goes down. But, retailers play this game all the time. We've always had tariffs and quotas and things we dealt with. You have to go through the process. But it won't just be straightforward. Nobody's going to say, okay, it's 10% tariff, I'm passing through 4% and I'm done. That's not going to happen. They're going to go through the whole process and pass through just as little as they can to maintain their gross margin dollars, which means everybody's gross margin percentage probably is going to go down a little bit, even if that all works. And if it doesn't work, it'll go down more.
Jan, it's Karen. Thanks for being on. I'm a Walmart holder. I know it's expensive, but I think in the intermediate to longer term, could them having to hold prices down force competition to be in a much weaker spot, as either they have to let prices rise because they can't afford to hold them down, or try to compete, which they probably won't be able to do? I see this as a way for them to gain share over time. How do you think this plays out?
Absolutely. If you're Walmart, if you're Costco, if you're Home Depot, if you're Dick's Sporting Goods, if you're TJ Maxx, and you're best in class in your space, you gain market share. You do the best job of controlling the pass-through of pricing. Other people can't. They either suffer or they raise prices and lose market share to you. That's going to happen. It's a good time to be a big, well-capitalized, strong, vendor clout kind of retailer. And I just named the best 5 of those. You own the very best one, the best retailer in the country, Walmart.
So, Jan, does that mean Walmart's cementing this wealthy cohort that it's taken on, and it's cool to shop at Walmart no matter who you are? I'm just trying to understand if that means, the multiple reflects a lot of things, and it's again, like some other companies out there, it's extraordinary. But does Walmart, is it underappreciated that it's going to continue to do business with this group of people for the foreseeable?
Yes, because it is. It solidified that during COVID. That's not something new. It'll solidify it even more as pricing becomes more important. But they've also changed their image, right? By selling online and selling where you can just pick it up at the store or have it put in your car when you get there, they captured that $100,000 a year plus kind of consumer. They're going to get more of that because they're just getting better at what they do. And then they've also added in all these ancillary services that are high gross margin businesses, and they're not big, but they're growing. So they've got room. But think about it. They just turned in a 4.5% comp in the U.S. Well, Target report, when they report this week, maybe -1. These guys are winning the game out there in competitive land, and they're winning it with that higher end consumer. And consumer's not going away now. They like the service they're getting from Walmart because they don't really expect much in the way of service. What they expect is convenience and price, and that's what they've been getting. But they've also been getting better product than they've gotten in the past.